Perfect. We're live on YouTube as well. All right. Welcome back, everybody. Today is August 25th, 2025. This is the Bookmap stream. My name is Spencer Riegle. I'm the Chief Crypto Options Trader and Strategist here at DARMA Capital Trading. So each week we kind of hop on and we talk about markets. Predominantly, we talk about Bitcoin and Ethereum markets as we are most active in there, but we also touch on little macro and kind of take a top-down approach to markets, right? So what's going on in the macro landscape? How is that going to apply to kind of the shorter durations, right? So monthly, weekly, and then we really get granular into some of the microstructure here, looking at the liquidity resting in Bookmap. So without further ado, let's dive into the disclosures. All information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, right? So each week we kind of start the session with talking about risk capital, right? We believe that you should only be trading with risk capital. And what is risk capital? That's capital in which you're willing to lose, right? So capital in which you're willing to put to risk for a greater reward. If that capital is needed for bills at the end of the month, groceries at the end of the week, or potentially even just to better your quality of life in terms of going to a concert with friends on the weekend or just doing some extracurricular things outside of work, that is not risk capital. And the reason for that, and the reason that we kind of talk about it initially, is if you're thinking about those bills at the end of the month, groceries at the end of the week, or that concert, you're not thinking about the trade, right? So what we like to focus on is the facts, what's happening here and now, regardless of kind of the noise. And I know we do talk a little bit about the macro backdrop because narratives do impact markets, right? But on a very basic and underlying foundation, what are the facts of the market? Are we over yesterday's high? Are we under yesterday's low? Those are fundamental themes within markets that matter. So, risk capital. Don't trade without capital that you're willing to lose. And that keeps you in the pocket, helps you keep present, and assume the risk when it exists, and then also mitigate the risks when it is not performing to expectations. So let's dive into the agenda, and then we're going to talk about some macro briefly, and then we will we'll start to dive into some of the outlooks and really get into the weeds of things. So macro events for those that are kind of just tuning in. Obviously, last week was the Jackson Hole, and so we saw a pivot, right? And so Jerome Powell finally came out notating that inflation was the lesser of two evils, and now he's starting to focus, and the committee is starting to focus on potentially the labor market, right? And so what does that bring to the forefront? Obviously, we continue to talk about seasonality, and that's just because we're in the midst of it, and we've been talking about it for a few weeks now, but markets are forward-looking, right? And so seasonally, these can be particularly tough times for risk assets. This weekend in particular is a U.S. holiday, right? So right into Labor Day, and then you have the end of the month, August, end of the basically summer months of trading, and head into that fall time trading, right? And so, a couple macro events that I'd like to talk about. September 18th is the FOMC, and then you have a big quarterly OPEX on September 19th in traditional equities. So there's a crosswinds of big macro themes kind of going on there to take a look at. And then obviously in the forefront with kind of the labor market, right, being first and foremost, non-farm payrolls, the first Friday of the month, September 5th, is going to be a big one to take a watch and to really understand how markets are moving around that, right? So would expect markets to remain active starting September 1st and through basically the first 2 weeks of the month into FOMC. You get some of that positioning typically towards the latter half of the month, right? The last 7 days of trade, we typically see some slowing in trade. However, markets have been incredibly volatile. Last week in particular, Friday alone, we were up 15% in Ethereum, printed an all-time high, and then quickly we have reversed right back to roughly the mid, right here at current price. So volatility is relative, with the range really being defined from 4,000 to 5,000 currently. So large range, and markets are just digesting. So another kind of key piece to look out for is there was a large seller in the market yesterday around midday, Chicago and Sunday. And so that's really shook up markets, with Ethereum printing an all-time high essentially, and then Bitcoin got a large liquidation, right? And so we saw liquidations cascading across the space, and markets really just haven't recovered since. So that was an interesting flow that hit the tape. But since then, nothing out of the ordinary in terms of large orders hitting the tape, but something to watch for, and especially in lower liquidity environments. So that's a bit of the macro. Let's dive over and kind of dive into the weekly outlook. So each week we start out talking about the website. So for those that are unfamiliar, you can head over to our website, DARMAcapital.trade, and figure out everything about us, right? So everything from about, advisory, analytics, academy, all of the three facets in which we engage in. And then specifically today, we're going to be talking about the analytics side of things. So if you are interested, and I was talking to somebody in Discord about this today, or over the weekend, we do actually have subscriptions for the data and analytics, but we also do offer a very extensive free education suite, right? So if you're not interested in paying for a subscription, but you are interested in kind of what we are going through today, one is we offer free trials on pretty much everything that we do, but two is we do offer that free education for you to further get into the weeds and understand what we're talking about, right? So if I hop over here, after going through that register, you can go over here, you can see all these courses we list for free, right? With all these different modules. So right now we have 3 different modules. A good one to go through, especially if you're newer to trading, is Trader Insights, right? And that kind of helps you understand all these different emotional components of trading, especially as markets continue to extend higher, which they have been. They've been incredibly emotional. And so we are continuing to build there and add there. So feel free to check it out. It is free. All right, let's dive into the weekly outlooks. So let's start with Bitcoin first, and then we'll dive into Ethereum. So we'll pull up Bitcoin, and then what you're seeing here is what we call our price map. That is our data and analytics. We support multiple different durations. Here on the website, you'll see daily, weekly, monthly. We also have for some more of those pro and institutional level, we have quarterly and yearlies as well. So specifically here, each week we start out at the weekly directional, right? So where's that weekly directional at? 115,687 and 20 cents. Our level is directly at the weekly directional, right? So that's both your price level, right? Your classic pivot being your directional. So your bias on price over and under it is positive, negative, and then your R level, which we have as a dynamic level that kind of dictates sentiment for the week. So basically, an R level at the directional is telling you that the market is ready to engage, right? So it spent the time digesting, and there's 2 scenarios, right? And one is you get a break either direction that doesn't look back, and it's quite large, or you get a continued coiling action around this level, right? And so specifically talking about volatility terms and some of those aspects, a market that's balanced for all intensive purposes does not need to become unbalanced, right? A low volatility market does not have to mean revert to a higher volatility, right? Inversely, a higher vol typically does mean revert to a lower vol, right? So couple ways to look at it. So first, we're going to talk about the market state. Market state's in a bull trend digestion, right? So in this signature state, it has an underlying positive foundation, but the current underlying positive foundation, but the expectation is for a sideways digestive trade. Typically, expectation is for a sideways digestive trade. Typically, the market has made a sharp advance in the prior session and needs a sideways session or two to catch its breath before it can resume the bull trend, right? And so we were in this signature state last week. Same thing here, right? Market's breaking down. R levels at the directional. Currently, we have the opportunity to do a buy DP reversal, right? We tried, and that targets the R level, but a failure here at the CR minus puts the offer back in charge. And we tried once again, and then quickly we have failed into the close here. So with that being said, the sell DP breakout is in play with the R level at the directional. That is your theme, right? So right now, the bull trend digestion is actually in question. Where does that become back in play? If you get a base over the DP, so 112, and we rally back, that would be a digestive trade. Probe lower, can't really break these lows, and so you base and you go back to the mid, right? However, because the market continues to be heavy here, if we can't hold this 110, 159.6, the expectation is for that full completion down to 108, right? If this market is really bad, you're going to get that full extension down to 104.5, right? While we've seen the vol in Bitcoin, it's lacked a lot of follow through, right? So look for levels for traps. Where are those levels at? One is if this market can base right back over 112, that's significant this week. Otherwise, this market's on the offer. Where does it go? 108 is the first target. 104.5 is the next target, right? Inversely, if we do get a base over 112, where's the expectation? Right back to the R level. This is the most powerful area in the market we see this week, right? And so we point that out. It's dynamic. It shifts every week. Shifts. Apologies. Every day, every duration, right? And so for this week, that is the level in which we are monitoring. So on the strategy side of things, we are currently in a sell R breakout, right? And so that puts the market at risk, right? Sell R breakout is a break under the R level that targets 2 APMDs, right? So immediately 1 APMD is your average price map distance. That's what we see the market to give on a basis, on a weekly basis, right? Or monthly, daily, etc. We've already completed one of them, right? And so the expectation is with the R level being directly at the directional and you're playing a R level breakout, there's 2 APMDs, right? So that puts 108.300 in play. Where's that invalidated? A base back over 112. What does that become? A buy DP reversal, right? We've tried it a few times this session. It's sloppy. It's incredibly sloppy. So take it with a grain of salt. It's not a perfect one. And need to be quick on any stop losses, right? So base over 112, targets 115 for that completion. And then a buy R fade is an optimal theme, but that is the market's got a base over the R level first, right? Which is 115,500. So here and now for the duration of the week, what are the most important figures to take note of? 112, 108.5, and then 104.5. Over here on Bookmap, let's see where some of that resting liquidity is. Right in here, right around 108. So we see that to be direct alignment with that downside target. And then basically the book is a light, right? And the book on the offer is light all the way up to 117.5, where you have about 250 coin roughly, and then 122, right? And so we see lesser alignment at 122, but more so alignment at that right in around that 118 to 119 level, right? So up in here. And that is, yeah, that's Bitcoin. So let's hop over and take a look at Ethereum. Cool. And then we'll pull up Ethereum on the right side as well. All right, so both markets have been breaking down into the close. And we actually are in a sell hedge theme basis. The daily, right, we broke under this high level, which is a show of weakness, right? So let's pull up the weekly and see where we stand. So currently the market's in a bull trend. Bull trend is a signature state typified by a market that continues to make higher move highs and higher move lows, right? So basic bull trend. We talked about it multiple times in the weekly stream. Currently, we took a stab at all-time highs yesterday, printed them, and then quickly liquidated right back down, right? So without the base of 4702, market is at risk down to the DP. It's currently where we stand. Market needs to hold 4402. Otherwise, the market really can extend lower, with that R level being positioned at 3876.86, right? Or 3877.08. That's where the market has the best amount of power, right? It aligns basically right under the previous month's high. But because we're under the directional, that's negative in terms of price. Because we're over the sentiment, it tells us to look for areas to buy, right? Just look for better areas to buy. Where are those areas? DP 4402, DT1 40052, all the way down to basically 3877. So this becomes a support band for the market to bid off of, and then this becomes your basically your higher level here to keep this move intact, right? So next 24 hours, what do we want to look at? Over 4402. Where does that target? Reversion right back to 4702. Otherwise, the market's at risk down to 4,000, right? There is good alignment at 4,200, so wouldn't be surprised if we don't actually get down to 4,000. But this support band down here, 4,000 to 3877, becomes the best area to deploy long risk capital this week. On the strategy side, let's talk about it. So buy our fades, buy DP reversals, right? And so market right here is at the DP. It's two ways. One is DP fade, right? Which is we base here off 4402 and we rally. Or if we do get a break, and let's say we get a break down to that 4200 and we get a rally right back through 4400, which could be quick, then that's a buy DP reversal once we print over this upper alert distance, right? So market breaks down under 42, down to 42, rallies back to 4450 and can hold. That's positive, and that targets 4700. Inversely, currently we are in a hedge theme, so a sell directional breakout, and that targets down to the DP, if not the R level, right? So those are two key areas to look at, and for here now, and especially over the next 24 hours. In the book, so in Bookmap on the right side, we have resting bids at 4,300, and then we have them basically stacked up here. So for 4,350, which is just on that lower edge down here, which is an important level to start monitoring. Offers are fairly light. We have a couple coins sitting up here at 45.60 roughly, which is basically just in this area again. And then more bids down at 4,200, right? So again, that 4,200 makes a lot of sense as well. So don't be surprised if we don't actually get all the way down to the R level. Get ready and expect one of these levels to hold, right? So so that's basically the outlook for the week. And let me make sure. Yeah. So that's the outlook for the week. and keep an eye on the first week of September. So as we head in, we have an expiry this week, August 29th, for the options expiry in crypto. And then post that, the markets can loosen up a bit, and more specifically, SEP 1 starts to open up markets, right? So we're going to get a lot of information this week. More than likely it's digestive, but obviously some pretty big macro events that are swinging around that potentially could change the markets, right? So markets need to rebalance. People need to rebalance risk, as the Fed just came out and acknowledged their pivot. So we'll see if they actually do cut rates, but they are starting to signal differences within how they are speaking, right? Market can take it a couple different ways. Market could bid up, which is what we kind of saw on Friday, and take it as positive because the market's taking the labor market more seriously, or the market could give it all back and take it negatively because they're acknowledging that we have a weaker labor market, right? And what does that mean? And then can people afford these things, and et cetera, et cetera. So basically, keep an eye out. Expect larger ranges. Respect the structure. 40.52 down to 38.77 is the best area to deploy risk capital this week on the long side. Otherwise, expect somewhat of a digestive trade as long as we're under 37.02. So good luck this week, and I'll catch you guys next week.